Hey there, welcome to the channel. So today we want to take a look at the disaster called crypto. All right, well, let's take a look at this article, Yahoo Finance. It says another big name crypto finance is taking drastic steps in the wake of plunging currency values. As The Verge notes, heavyweight lender Celsius has paused all withdrawals, intercount transfers, and swaps in response to extreme market conditions. It's meant to stabilize liquidity of assets, et cetera, et cetera, et cetera. Wow. So what's going on with Bitcoin? Well, Bitcoin down 13.6% today, gotten the crap kicked out of it. It has broken below 26,000, but really important, it's broken below all the near-term support. There's no support now till where you can see on this chart, you have the volume, but price, and you can see there's little, if no volume in that whole area all the way. You only start getting to some place where there's some volume and potential support at the closest is 12,000. More likely you'd have to get into that. So you're talking 10,000. So look, this crypto is done. Now, as well, I was looking at a lot of the cryptos, all the other leading cryptos across the board, they're all down like, anywhere from 10 to 15 to 16%. So here's an important kind of investing thing. And this is not financial advice, but this is something that to consider, that I would suggest to consider when what's going on with these crypto companies. We had a bunch of companies and all different names. This one's talking about Celsius, there was BlockFi, all these other ones. And a lot of these companies, what they would do is they would offer you, hey, 8% on your money or 10% on your money. And they've been doing this for a year or a couple years now. So keep in mind that we've been in a low interest rate environment where even now, after a spike in interest rates, the 10-year treasury is only yielding 3%. So the fundamental question is, how in the heck is someone going to pay you 8% interest? How are they going to pay you that when the current interest rates are 3%? Or like in a bank, they're 0%. How do they do that? Well, they have to take risk. It's very, very simple. They have to take risk. And now we get to this point where all of a sudden these crypto companies that were paying people all this money, et cetera, well, now they're freezing withdrawals. They're freezing things because, look, they're in trouble. Now the value of the crypto is dropped through the floor. People want to sell the crypto, but they lent the crypto out to these companies. And these companies, I don't know, I'm not accusing, I don't know any details, but it appears that some of these companies are worried that they don't have enough crypto or they don't have enough money to meet the withdrawals. That is the only reason that you would prevent someone from withdrawing, and you would also prevent swaps and other things, anything that might take assets away from you. That would be a concern if you don't have the money. If you don't have the money. So think about it. If you lent $10,000 in crypto and you're seeing crypto drop through the floor and you're like, well, I want to sell that crypto. Well, first of all, you have to get the crypto that you lent out back, and then you can sell it. And now you can't get it back because they're freezing the account. They're freezing the transfers. So that's what's happening. And so you got to understand the reason that it's happening is these are unregulated companies that have, hey, look, they're acting like a bank, but without the regulations of a bank. And it is a disaster. And it is the epicenter of this financial crisis that we are going headlong into. This is really the epicenter of it. That was a question you always ask in these different market cycles, like, where's the epicenter? It turned out, like in the financial crisis, the epicenter was housing. That's where it was. All the corruption and the way they wrote those loans and they leveraged up the bets on the loans and stuff. That's where it was. Here, I mean, the leverage is, we don't know what it is, but it could be very high leverage right now in crypto. And anytime you have leverage, what it means is you levered. It means when everyone comes to pull their money out, you don't have the money. You basically don't have the money. So it very well could be that some of these companies, right? It very well could be that some of these companies are like, they're preventing money going out, and they're actually accepting, the stories are out there that they're accepting money coming in. And that could be the worst of a potential Ponzi, where it's like, look, you need new investors coming in to pay off the old. Now, I'll tell you a story. Back in the day, I did a lot of different investments, some private placement type stuff. One of these was oil wells. I did a bunch of these. And then I also did some other weird stuff like some concert promoters. Now, here's how it worked. It turned out that the concert promotion scheme was a total fraud, and it was a significant fraud, and it was one of the biggest ones that was it the FCC or FTC and the FBI. I can't remember if it's FTC, but definitely FBI was the investigators. It was one of the biggest frauds. Something like hundreds of millions of dollars were just defrauded. So, but here's how it works. So I've been defrauded. So I get it. I understand. But let me explain how it works. What would happen is for example, I'd invest money and it was going to be promoting some concert tour, and they'd always put some big name on it and stuff like that. Put big name performers. So you think, oh, I'm helping you fund this tour. And they'd always guarantee your return. We'll guarantee you 20% on your money. They had one, and the last one, they were guaranteeing 50% on the money. But here's what they did. And what they would do. See, what they would do is like, you invest your money, all right, the 1 year up, and they would pay you the money. The check would be good. And it would be good. So you're like, oh, okay, well, I'm going to invest more. I mean, I thought I was smart, and I did the test. Like, I'm going to withdraw my money and see if the check clears. It clears, of course. But then a couple of weeks later, the guy's on the phone. Oh, we got the next thing. So, okay, we do that. And then so now we get the money invested. Now the money's roll over. And I'm like, oh, well, we'll pay you another 50% of this money if you roll it over for another year. Oh, hurry up. I'm ready for it. Oh, well, you got to get it in by Friday at 5. Like, oh, okay. So we're all rushing to sign the paperwork to commit our money, right? Commit our money. Sure enough, by next week, it was like, oh yeah, it's all blown up. FBI's involved. It's a disaster. So look, it happens. So it's a generic overall investment thing. Something that sounds too good to be true is too good to be true. No one ever, anywhere, anytime, in any place can promise you a return. They can't. Past performance is no indication of future performance, and they can't promise you that. They can't. Right? If they are, then you really have to look at it. It could be fraudulent, and that's how they get you. So if this is happening, and I'm not saying it's happening crypto, but just looking at all the advertisements, hey, make 8% on your money, 10% on your money. How can they do that? They can't do that. They can't do that long term when the interest rates were at 1% for the last decade. Where were they putting the money? Not unless they were like, buying Tesla stock, and it maybe that worked out good for a while until the more recent downturn in the market. So you can see how the leverage comes out of the system. It starts coming out of stocks, and it's coming out of bonds, and then it's affecting and hitting everyone, and it's hitting every speculative asset. And Bitcoin is not an alternative currency. It's not gold. It is a speculative asset. And this should tell you, and this should be proof to you that is the case. All right. Let's look at some other disasters that are going on today. Yeah, so look, SPY, look at just really big breaks. I mean, it just trying to hang on to any kind of support now, just big breaks down. So, big breakdown on really all the major indices here. If we look at our Qs, yeah, just Dow Jones Industrials. So it looks really crappy about across the board. Another important thing is, the rates really spiked up today. I mean, that's a huge move, 6%. And remember, now we're in this problem. We're in this problem where it's like, look, we haven't been above 3% for so long, and now we're starting to maybe get comfortable above 3%, and that's huge because that means, this keeps pressing up. That's going to press up the mortgage rates, everything like that. It's just going to keep going and going and going at this point. So we have the Fed meeting coming up on Wednesday. We have producer prices tomorrow. And so it's an interesting one. Like, okay, all the inflation blowout from last week, is that, are we going to get another round of that? Are we getting that right now? Is now their sell-off is occurring because maybe some people are thinking like, oh, the PPI is going to look horrible and I need to get ahead of the sell-off. I have no idea, but we have that tomorrow, and then we have the Fed decision, and me, Kevin did a bunch of good videos on that today, and it's a really interesting thing because they have such a problem. They are very far behind the curve, and they need to kind of catch up and get going, and they're in many ways they've kind of got it clear. Like, if you go back to the Trump administration, he was beating on the Fed about raising rates. You can't raise rates, can't raise rates. You're going to kill off the market. And that was his big thing. But now you have a situation where it's totally different. The guy in charge he only cares about what? He only cares about, inflation at this point. Now, maybe Trump would have cared about inflation if it got to this point. It could be. Who knows? Who really knows? But the point is that's where they're at. So, the market going down 2-3% at a time, it means nothing. It means nothing to the Fed. They're not concerned at all. And it may appear that, Biden administration has got his back. So if you're thinking the Fed's going to magically turn around because the market's off 20-30%, that does not seem to be the case at all. All right. I think that's it for this one. Good luck.